So when should I take my Social Security? How much will I get? Does it make sense for my situation to wait? Will it run out? If you are asking these questions, you are not alone. Social Security is confusing, and for most retirees, their Social Security benefit accounts for around half of their income going into retirement. So it definitely is a big deal to make sure that you get that right. In this video, I will break down everything you need to know in order to make an educated decision around your Social Security benefit, how it works, how your benefit is calculated, what happens if you wait, what happens if you take it early, all of the things that you need to know to make a good decision. So let's start with how Social Security works. Your Social Security benefit is based off of your primary insurance amount, and that primary insurance amount is calculated based off of your 35 best working years. So with your 35 best working years, it is adjusted for inflation, and then an average is taken, and that is the number that is used to calculate what your benefit will be at your full retirement age. Now, what's your full retirement age? Your full retirement age is either 66 or 67. If you were born before 1954, then your full retirement age is 66. If you were born in between 1954 and 1960, then your full retirement age starts at 66, and then you add 2 months for every year between the 54 and 1960. So if you were born in 1955, then your full retirement age would be 66 and 2 months, and so forth. And then if you were born after 1960, then your full retirement age would be 67. So then what happens if you take your benefit early or late? Well, let's start with late. So if you wait to take your benefit after your full retirement age, then every year you wait, your benefit will increase by 8%. And this increase, this calculation is simple interest. So it will just increase by that percentage each year, not necessarily compounding and building on itself. So if you wait for 2 years, then your benefit will increase by 16%, 3 years, 24%. And then that caps out at age 70. And then on the other side of things, what happens if you take a reduction in your benefit? Well, if you take your benefit as early as you can at age 62, then your benefit will be reduced by 30%. And then after that, how that works is for the next 36 months, so for the next 3 years, if you wait to take your benefit, let's say you take it at 63, then between 62 and 63, then your benefit would increase by a little over 0.5% each month from that 30% reduced amount. And that's for that first 36 months. And then after that first 36 months, from then up until your full retirement age, then your benefit will increase by a little under 0.5% per month each month you wait. So when should you take your benefit? Well, of course, it depends on your situation, but there are some important things to consider. First and foremost, I would say would be your life expectancy or your health. If you are in a situation where you're not doing well health-wise, or you're not expected to live long into retirement, then it could make sense to take that benefit early. It wouldn't quite make sense to wait and to maximize your benefit at age 70 if you are only going to live until age 75. Then it might make more sense then to take your benefit earlier so that you are able to actually utilize those dollars. Because when you look at a typical Social Security analysis between taking it early, taking it at your full retirement age, or waiting to take that benefit at 70, the break-even point is on average around age 80. So if waiting that long does not make sense for you, then it can make sense to take that benefit earlier. Just really quick, guys, if we haven't gotten to meet yet, my name is Dylan Martin, certified financial planner here with Stewardship Investments, and we work with Christian families to help them retire well and to be good stewards. Another thing to consider is your income sources, your other income sources that you may be having in retirement, such as rental income, pensions, if you are still working, various things like that. On one end of things, it may make sense to delay your benefit because you have these other income sources coming in and they can supplement it. Or you may want your investments to grow, so maybe you take it early. It would just depend on the situation. But part of that is if you're actually working and having earned income coming in, this is a big factor to consider when taking your Social Security benefit. Why is that? Well, that is because if you are taking your Social Security before your full retirement age and you are also bringing in earned income up to a certain amount, then your benefit could get reduced. So for 2025, that income limit starts at $23,400. So if you make above $23,400 up until the year that you would reach your full retirement age, then your benefit would get reduced by $1 for every $2 of earned income above that 23,400. And this money is not just taken away, it's more of a temporary withholding that will get recalculated back into your benefit down the road. And then if you are working and you are in the calendar year that you are going to turn your full retirement age, then that income limit is $61,200. And if you make above that, then your benefit is reduced by $1 for every $3 you make above that limit. So that limit increases in the year that you are going to reach that full retirement age. Another factor here on when you should take Social Security is in regard to if you are eligible for a spousal or survivor benefit. So how does the spousal and survival benefit work? Well, as an example, let's say that you are married, one of the spouses worked for the entirety of the marriage and the other spouse maybe stayed at home. Well, that other spouse that stayed at home is not going to have enough of those credits maybe to collect a benefit on their own. But the other spouse who did work, they have worked and earned a full benefit, let's say. So let's just say for easy numbers that the full retirement age benefit for the spouse that worked is $4,000. So even though the spouse that didn't work is not eligible for a benefit on their own, they are able to take a spousal benefit that is based on their spouse's primary insurance amount. So if it is $4,000, then the spouse is able to take half of that was not working, so that would be $2,000, and that is the amount that they would be eligible for at their full retirement age. Some disclaimers there is the spouse that the spousal benefit is getting based off of, so the one with the $4,000, they would have to be collecting the benefit already in order for the non-working spouse to be able to collect their spousal benefit. And they only get that full $2,000 if they wait till the full retirement age. Again, if they take it early, they're subject to those same reductions that we talked about earlier. And then how the survivor benefit works is, let's just keep using the same example here. You have the working spouse who has the $4,000 Social Security amount, and then you have the non-working spouse who is collecting $2,000. Well, let's say that at age 80, the working spouse that was collecting $4,000 has now passed away. Well, now the non-working spouse is able to collect the higher of their two benefits, which would be the spouse's $4,000 benefit. So then they would be eligible to get that survivor benefit and essentially up their Social Security amount. So the non-working spouse wouldn't now be receiving the $2,000 and the $4,000. The $2,000 would get replaced with the $4,000 that is coming from the working spouse. So now let's talk a little bit more about how your Social Security benefit is actually taxed. So at a maximum, only 85% of your Social Security benefit is able to be taxed as income. So at all times, that other 15% is essentially tax-free. And then under that, there are thresholds. So if there's a couple that with their taxes is married, filing jointly, if they make under $32,000, then their Social Security would not be taxed. That income calculation that the Social Security office is using is your adjusted gross income, so your AGI, plus any non-taxable interest, and it's plus half of your Social Security benefit. So if the total of that is under that $32,000 threshold, then your benefit will not be taxed. Above and beyond that, if that income calculation is between $32,000 and $44,000, then half of your benefit would get taxed. And then above that $44,000 mark is where 85% of your benefit would get taxed. Something to note here is that these limits have not been and are not going to be adjusted for inflation. They might in the future, but that is not the case right now. For most people at this point, as Social Security benefits have been increasing, incomes have been increasing that the benefit's based off of, most people are at the point where 85% of their benefit is getting taxed. So you can most likely assume for planning purposes that that is you. All in all, Social Security is complicated, and you worked your entire life in order to be able to get this benefit. So we want to make sure that you're able to maximize that. So I hope this video was helpful just to quickly walk you through some of the rules on how Social Security works, how it gets taxed, different aspects around when and how to take that benefit. And then just to end here are some tips around how to optimize your Social Security. It's typically a good rule of thumb that delaying your benefit in order to have that grow makes a lot of sense for most people. But again, I say for most people, not everyone. There are situations where taking your benefit earlier can make a lot of sense. Maybe to let your investment nest egg grow, Or maybe, like we said earlier, you're not in a position health-wise that it makes sense to wait. Or maybe you're just in a place where you need that money for your retirement. Then it can make sense just to go ahead and take that benefit so that you don't have to wait and delay your retirement. A lot of planning for retirement and optimizing your retirement is more than just optimizing the numbers, it's optimizing your situation, utilizing all of these calculations and the money so that you can live your best life. You also want to make sure that you're coordinating when to pull your Social Security with other sources of income that you're going to be having in retirement. Maybe you have some rental income, or you have a pension, or planning to take withdrawals from your investments. You want to make sure that when you are taking that benefit, that it makes sense with the rest of your situation. And another tip with that, it may make sense to meet with a certified financial planner just to help you walk through your entire situation, put everything together so that you can have the right claiming strategy for you. If you are looking for specific help with your Social Security strategy or your overall retirement planning, you can click the link below in our bio to schedule an initial planning call with myself. Or if you're just wanting to see if you're on track for retirement, you can also click into the link below to our website and take our quick 2-minute retirement quiz where you can get a specific answer to see if you are on track for retirement or not. Hope to see you guys here next week, and take care.